Hey investor friends, I'm Michellemarki, and today I figured I would share my investing practice and personal finance habits and routines with you because this is one of my passionate joys and hobbies that I really love learning about investing and economics and personal finance and wanting to share that with you because knowledge is power, and maybe you'll get some ideas from some of what I'm talking about that you might want to include into your own routine of how you go about learning about investing and applying these ideas to your own personal finance routine. So if that sounds good to you, I hope you'll like and subscribe to my video and YouTube channel. And let me tell you what I typically do. When I'm having my morning coffee and breakfast, I usually like to visit Wall Street Journal at WSJ.com and check out some of the morning headlines across US and world news and also business and economic news. And if I have time, also to watch some of their videos because I find them to be highly educational, like learning about how the Federal Reserve is losing money now that interest rates have gone up a lot, and also about the strong US dollar and other kinds of macroeconomic or investing related topics that can really be helpful and maybe can help serve as some foundational knowledge as you also go through building your investing knowledge. And also I check it toward the end of the day, like after the stock market is closed, to learn how things like stocks sank after Fed Chief Jerome Powell signaled that there's a need for more rate rises. So that might inform some of my own investing decisions. Like maybe I don't want to aggressively invest all of my cash if I know that the stock market is just going to keep going down even more, the more that the Fed hikes interest rates. So maybe I might want to keep that in mind. And also then I like to visit my local library and read the Wall Street Journal in more depth because I don't have a subscription to the Wall Street Journal. So it just helps to be able to access the newspapers at my local library as well. And what I also find myself doing is often Googling companies or investors that I'm interested in learning about. And then that will lead me to a bunch of other sites. And also I'll check out some sites that don't bring up a paywall too aggressively, like sometimes on CNBC or Marketwatch and Bloomberg sparingly, and also Seeking Alpha and other places that have decent content. And also in addition to articles, I love reading investing books. Like I'll hear about investing books on podcasts or from investors that I admire and like on social media. And then I'll read those books as well and try to gain some wisdom from them and apply what they've taught me to my investing practice. Over time, as I'm learning about companies that I might already like or that I've just heard about or read about, I'll make lists about companies to investigate, and then I'll also add some of these to my watch list in my brokerage apps, and also just generally be on the lookout for new companies that investors I admire might be discussing or that they might already be invested in. Like on Dataroma, you can check the 13F filings for what some super investors are invested in, and that might give you some ideas of potentially good companies to invest in. And so I'll do a deep dive on some of these companies by checking out their annual and quarterly reports known as the 10K and 10Q respectively, and also these companies' earnings calls, webinars, and also transcripts, because that can help reinforce what you heard on the webinar. And then that might also validate what some of your understanding is of a company, or if you don't like what direction they could be going in, maybe you might move on to another company if you either don't like what a company is doing, or maybe they're too hard to understand what they're doing and what their business model is all about. And in addition, I also like checking out the blogs and websites of some famous investors like Ray Dalio and Bridgewater Associates, or Jeremy Grantham of GMO, or also Howard Marks of Oak Tree Capital Management, and they're really good to learn from. Or also the historical letters of Warren Buffett of Berkshire Hathaway, and also his current letters, as well as Nick Sleep's letters that even though he doesn't run a public fund anymore, I've heard really great things about his letters, so that's also something that's on my list to read. In addition, I also like listening to investing podcasts like Invested by Danielle Town and Phil Town, and also the Investors podcast with William Green, as well as any content that investors or everyday people might have on YouTube, and some of which is also Phil Town's Rule 1 Investing YouTube channel, or Monish Pabrai's YouTube videos are great. And learning about the interviews and annual meetings from investors, like going back through some of Berkshire Hathaway's annual meetings on YouTube, or the Daily Journal also features great content from Charlie Munger. And also I like learning about investing stuff from social media platforms. So whether it's from professionals or just everyday people, there's a lot of great stuff out there, and you'll curate your own list of people that you like to learn from. And also it's really nice to get some economic and investing indicators via email newsletters, as well as stock alert apps. And you have to just trial and error some of these because some of them are more useful than others. And I like to check my financial accounts at least once a week, like across my investment brokerage accounts and bank accounts. And also every now and then I like to check up on the latest high yield bank savings or money market or checking account rates, and also what some Series I or Series EE bond rates might be. And before, I never used to be that into bonds until basically this year, when US Treasury savings bonds are really becoming compelling, where it used to be 9.62% in October 2022. And unfortunately, the rate this November went down to officially 6.89% for Series I bonds until April 2023. And then also Series EE bonds are surprisingly up from being like at 0.1%, which was really negligible, to now being at 2.1%. So I think that's fairly impressive how the government is offering really interesting savings bond rates now. So maybe that's an alternative to a sinking stock market, and just food for thought if you want almost risk-free bonds to invest in. Checking out the US Treasury's bond offerings might be of interest. And I would still stay away from what's considered high yield, because those are considered usually junk bonds from corporations. So be careful what kinds of bonds you're looking into. And earlier on in my personal finance journey, I used to read a lot of personal finance blogs, like from NerdWallet or Mr. Money Mustache or Financial Samurai, and also Investopedia and Bankrate. And none of them are sponsoring me, by the way. I just wanted to mention that those were some of my earlier influences, as well as this book, I Will Teach You to Be Rich, from Ramit Sethi, or also a book that I recently checked out that I thought was pretty decent was Broke Millennial from Aaron Lowry. So if you want help in getting to know about a bunch of personal finance topics and negotiating for the lowest rates on your credit cards, or other tips related to credit cards or loans and things like that, those are some great resources. And also I've learned that I really like maxing out specifically my Roth IRA and Roth 401k, and also a health savings account, or HSA. And those are my favorite accounts that I've decided that I want to attribute most of my retirement or health saving investment money towards. So I think that that's my preference, but you might also get some benefit out of a traditional IRA, or also if you have children, you might want to look into a dependent flexible spending account, or FSA, and those could also help you in terms of saving up for retirement and or your medical expenses. And in my early 20s, I made it a priority to pay off my student loans and car loan as fast as possible, so that I could finally be debt-free by my mid-20s. And that was a huge relief off my shoulders. And it freed up so much more possibilities when I didn't have to be weighed down by a burden of debt. And also, I've always paid all my credit card and any other utility bill in full every month, unless I had an offer of like 0% for 12 or 15 months, and then I took advantage of that. But otherwise, I've paid all of my bills in full, and I like to schedule them ahead of time or have them be on automatic bill pay, so I don't really have to think about them, and I have plenty of cash in my checking account. And I've also built up an emergency fund, because you never know what cards you're dealt in life. So I like being prepared in case of the worst case scenario, and never be caught without enough money to handle whatever situation comes my way. And also, when it actually comes to investing, when it was my 401k, I'd like to generally accumulate cash so that I could eventually roll that out into a Roth IRA. But over the years, it was also invested in whatever index fund I had available. And because a lot of employers only give you a certain limited amount of funds that you may invest in. So I tried looking at some of the lower cost expense ratio funds that generally were in the US stock market, like let's say the large cap kind of representing the S&P 500 is pretty decent, but not advice, just something I generally look for, or maybe growth stocks. You can't really go too wrong, hopefully, if US growth stocks come back and improve in the future. But anyway, some of that aside, what I like to do when I'm investing, if I've determined that a company's stock price is appealing based on valuation calculations that I've done and my research into the company, because it's important to do your homework and learn as much as you can about a company and its management before you invest, then I like to tranche in or buy portions of the company stock gradually and dollar cost averaging down if possible. And sometimes I don't always tranche in, but I might allocate all of the capital I wanted to put into a company right away, especially if I'm not sure if I'm going to get a better stock price. Then I might just be fully allocated, because I would rather gather chunks of cash and then invest it when I think the stock price is appealing, rather than invest month by month, because I just don't like that idea as much. I feel more comfortable buying at a stock price when I put in a limit order. And also sometimes I might lower my cost basis by selling some cash secured puts or selling some covered calls. And that might be a way to either generate some cash flow or just bring down my cost basis on a company that I'm already invested in. And so those are some of my tactics that I use when I'm investing in stocks. And so across all these activities, I might generally spend between 10 to 20 hours a week on all of this stuff. Of course, I'm not always the most proactive. Sometimes I fall behind on also reading up on companies' reports. So sometimes I need to just get myself a little bit more motivated to check them out in a more timely way. But generally, I try to keep tabs on my favorite company stocks. And it's part of why Warren Buffett recommends not investing in more than 6 individual company stocks if you're going to put a lot of time and effort into researching and learning about companies, because you could always just do what's average and decent, which is invest in an S&P 500 index fund and call it a day. And that doesn't require much effort at all. But if you actually enjoy learning about business and economics, then it might be worth it, and you might feel more satisfied and fulfilled if you're actually invested in the kinds of companies that you like and understand, and you admire their management and the direction the companies are going in. So I hope that my routine and how I go through all of this investing and economic stuff and personal finance matters is helpful to you, and maybe that will give you some ideas that you can also add to your own life as you also try to grow your wealth. And so if you enjoyed this video or learned something, please like and subscribe, and I wish you well on your journey to being the best investor and personal finance master of your life. Till next time.